Next, let's look at the cash receipt cycle. So the cash receipt cycle involves like the entire process when company receive cash. For a lot of companies, they categorize the cash receipt in different ways, in three ways mainly: collection on the accounts receivable, cash sales, and all other transactions, including the borrowing and disposal of assets, something like that. So in here, our company Warren Sports like to put the cash sales in cash receipt journal and keep the credit sales in the sales journal. So let's take a look. So the first step is to receive the cash. The cash receipt subcycle always started with the receiving cash. So receiving cash, then the relevant document include the remittance advice or cash received pre-list that you have the company have filled in previously. So remittance advice is a document sent to the customer along with the sales invoice to tell the customer how to make the payment for this sale. So on the right is our Warren Sports company's cash received cycle. You can see that received cash is taken care of by Jim Adams. So it starts with receiving checks or email notification of the bank deposit, this ACH deposit. That means we received the cash. So then received for cash sales. If it's received for cash sales, that would include customer purchase order. So you see one transaction in SUA that is a cash sale. So the customer give the check along with the purchase order, what they need. So once you receive the check, you wanted to restrictly endorse the check. Restrictly endorse is one type of internal control method that we will talk about it. Restrictly endorse the check, then when someone else get the check, they will not be able to deposit. So, and then they will compare with customer. So if it's a cash sale, again, customer purchase order will be attached here, and that goes to page 18 to A, which starting the initiate the sales process because it's a cash sale. Okay, so and once you get the cash, and we wanted to enter the cash receipt in the cash receipt pre-list. So in your packet, there's a document called cash receipt pre-list. Basically list all the cash receipt the company have received, and including the dates. So the next step would be that next slide would be making the deposit. Wanted to deposit. So once you have the cash, you wanted to make the deposit. Then the relevant document would be the bank deposit slip that in your packet as well. So deposit process is done by Ray Kramer. You prepare bank deposit slip. That is something that you need to prepare. And then along with the check that you received to deposit. So that's the whole process. It's pretty simple. Okay, that's the second step. And the third step would be the recorded in accounting recording for accountants. So we need to record it, and that is still the job of Jim Adams. So you should record in cash receipt journal. This transaction we have received the cash, and also recorded in the customer subsidiary ledger. Okay, so the two document, it's not really document like accounting document we need, are the CR and AR subledger. So this is this part. So for this part, only collections on accounts receivable will get posted to AR subsidiary ledger, of course, right? And then we also have cash received pre-list. You have to mark it. It's being posted to accounts receivable subsidiary ledger. And then we are done for this transaction, for this step. Next is at end of the month, you post it to general ledger, post the total to general ledger. So this step is the same for all sub-cycles. It's like you need to post the summary of the journal to general ledger at end of the month. For every cycle, we need to do that. So that's a cash receipt cycle here. Other sales sub-cycles, we already mentioned it. I just make the reference here. You need to take a look because when you have this transaction to be recorded, you need to go to here and I give you the reference page. So lastly, the SUA project also requires you to do a accounts receivable aging report, but I do not make it requirement. You can choose to do this and you will get extra point for complete this report, aging report. Basically, the accounts receivable aging report is a list of the ending balances in the AR subsidiary ledger. Okay, so we get a summary for each customer like this, and each line on the AR aging report is for one customer. So you can see here is that we have customer number, customer names, and this would be the 330.42 here is the total outstanding balance for this customer, James Abel. So, and then for all this outstanding amount, we're going to classify it into current, 31 to 60 days, 61 to 90 days, and over 90 days. So for these 4 columns, this is called aging, usually cash receipt. When we classify it into ages in days, we need to notice that the cash received are assumed to apply to the oldest outstanding receivables. So what does that mean? It means that if the customer has outstanding balance of like 400 for November sales and 300 for December sales, so they have 700 outstanding balance, and we collected 500 cash. So then the remaining 200 will be assumed to be related to December sales. We're going to assume the 500 cash collection. We're going to collect the November sales first. Okay, so that's what it means. Again, this is optional, and if you can do it, that would be great. And I only ask you to do for one customer of Warren Sports. Okay, so now let's kind of like go over a little bit internal control stuff that this revenue cycle have touched on. So for the internal controls in related to revenue cycle, we have basically 4 major types of internal controls. The first one is adequate documents and records. We have seen that in the pre-numbered bill of lading and pre-numbered sales invoice. Okay, so that prevent that some kind of sort of fraud. The second type is authorization of transactions. So what do we need to authorize usually? We need to, like before you process the sales order, we need to approve the customer's credit. We need to see whether the customer is still owing us a huge amount of payment. So they have an outstanding balance that is exceeding their credit. Okay. And then we also need to have approved sales order before we ship or pick any goods. The sales invoice need to have the sales price that are coming from authorized price list or contract. And for returns, we also need to have authorization. Okay, and when issuing credits to the company, to the customer, we also need authorization. For cash discount, we need authorization. We also need authorization for a lot of transactions. And then we have this segregation of duties that we will talk a lot in chapter 13. But right now, it's basically that we need to separate the different duties for the same transaction to different people. So like we cannot have one person to take care of authorization, record keeping, and asset custody. Okay, so this segregation of duties is trying to prevent fraud and mistakes. And then we will have independent check. So basically like have somebody else to look at what you have done and see whether it's correct or not. So these are the related internal controls that we will see in SUA's project. So that's it.